Hey everybody, welcome back to Chipstock Investor. Today we're going to be talking about a company that we haven't covered heavily, at least on our YouTube videos. We've talked about it plenty in our Discord community, but it's a software company that we personally use, a workflow management software called Monday.com.
Delve into our little personal story on Monday.com. Maybe we should kind of introduce some things here. I did ruffle apparently a few feathers when I said there are no moats in software in our Palantir video. And that is a statement that I did clarify later in the video if you watch the whole way through. And of course, if you watch all of our software coverage, you'll hear us say all the time, yes, of course, there are a couple software moats out there. Salesforce.com, one of our core holdings that we've had for a long time, maybe Adobe. But most of the companies people think have software moats, Microsoft, Amazon, Google, you look under the hood, they're not actually software companies. So there's no moats in software.
I think to be fair, I was the one that uttered that offensive phrase in the Palantir video, but I'm glad you're going to draw the ire today.
Well, I baited you into saying it, and so I didn't have to say it. So if we're splitting hairs, which I guess we're doing now, that's why you said it.
It's true. This episode is sponsored by our friends at public.com. Are you dissatisfied with your savings account? Check out public.com.
Public.com has just launched its new high yield cash account, offering an industry leading 5.1% APY. There are no fees, no subscriptions, no minimums or maximums, just 5.1 interest on your cash. You can transfer or withdraw cash as often as you like, and you get up to $5 million in FDIC insurance. Grow your cash at an industry-leading 5.1% APY with a high-yield cash account at Public. Go to public.com to learn more. Okay, so this is our inverted pyramid on the hierarchy of the economy. We've done a number of past videos explaining what this is, but in simple terms, in the digital economy, the red pyramid there on the right, these two things really aren't separate from each other, traditional economy versus digital economy. But when it comes to products and services, the largest top of the funnel in the global economy, we're talking about trillions of dollars in sales. A product and service business like Monday, because that's what ultimately software is, it's just another product or service. You have tons of space to go out and grow your business and attract customers, but it's also a highly competitive field. And whenever you have success pioneering a new product or service, you're going to attract attention. And this is definitely the case with Monday.com. Subsequent to their Q2 earnings update, they announced that they hit their first $1 billion in ARR, annual recurring revenue, important growth metric for a young software as a service, cloud-based software company. And let's talk about the competition here. We're not putting Salesforce.com on this list because Monday's competing offering against a company like Salesforce is newer, but there is still plenty of competition here, right?
I know when I was looking for a workflow management software for our personal use, our business use, there was a ton of options. And on this slide, there was a few that I personally looked at: Asana, Atlassian, and Smartsheet, all companies that place in a similar space as Monday. All of these companies offering very similar products. However, there are some things that set Monday.com apart from their competitors.
Yeah, underneath the product that users interact with, Monday kind of built itself from the get-go with the vision that it could be a platform type of software business. And what that means essentially when companies say that they're a platform is, again, building a moat over time. It takes a long time to do this in software, where you can offer breadth and depth to your product and service offerings. So not just one point solution, but many point solutions, ideally ones that are unified somehow on the back end. For Monday.com, it's a unified database. So a company's data kind of all goes into one centralized location on the back end of the software. And so if you use other products, for example, maybe you've expanded your use from maybe the workflow management product, and now you're also trial running the new service product that's brand new in beta, your same information stored in that database is just automatically ported over to this new product. So Monday again, a platform from the get-go because of the way they've built the software, with the mindset being they would like to be a platform, or maybe another way of putting this, they would like to build an inherent moat in their business gradually over time.
And the only way a software company specifically could build a moat like that is to be constantly adding new features, new products to their services. And Monday.com has some nice features where you can control your setup, adapt the software to your business needs, and scale with the business. Monday.com is not making any money off of Chipstock Investor because it's a team of two, but they do have an increasing number of enterprise customers, somebody that's actually paying them money.
And this is an important go-to-market strategy for a software business. And this is a blueprint that has blown up in the past when we've homed in on a business that we thought was a good investment. But more often than not, this is a marketing trait that all of our top software investments all share. And it's this exactly, offering a really, really good, solid, free, or very cheap option so that you can go out there and flood the small and mid-sized business space with users of your product. And then from there, as you add more depth to your product, increase the number of features that are available, then you can start to slowly move up market. Or as those smaller businesses scale, as they grow, they add more seats, more users. You kind of have this built-in growth from that part of your customer base as well. It's a strategy that has worked phenomenally, and it really helps a business when they're able to offer a free or very cheap entry-level software product. It helps them kind of get an early edge if there's a competitive field. And like you said, Kasey, it's not just something that you chose when looking for a workflow management. A lot of other small businesses opt for those as well over something like Asana or Atlassian, one of the bigger incumbents in the industry.
One of the things that we like about Monday.com and the management team there is they pretty consistently underpromise and over deliver. This is Q2 2024 highlights that were just posted recently. Revenue came in at 236 million, up from 217 million last quarter and 176 million year over year. So 34% year over year revenue growth. They've expanded their free cash flow as well, $51 million, which is 22% of their revenue.
Yeah. And of course, we're in a new era. The 2020s playing out very differently than the 2010s for cloud-based SaaS business models, software companies that like to collect customers and get that recurring revenue. Last decade, a lot of businesses got a free pass. They didn't have to worry all that much about profitability, or maybe they cared about free cash flow, but completely ignored GAAP or IFRS based profitability. But the other nice trait that eventually drew us to Monday.com as an investment was it's already been free cash flow positive for a long time. And we are in a year in 2024 where the company we're going to get to in a moment has plenty of cash on balance. They've gotten more aggressive with development of new products and more features. So they're investing some of that free cash flow for growth to keep that growth rate over 30% this year. But even in spite of that, this was their outlook 3 months ago, but this is the most recent outlook upgrade after Q2. In spite of that elevated investment into development of new software, new products, new features, you can see the free cash flow margin still holding up very nicely. Again, 3 months ago, outlook 25 to 26% free cash flow margin for the full year period. They've bumped that up now to 29%. Now, I'll also point out here, we won't spend a lot of time on it, but Monday.com also just recently flipped to GAAP profitability as well, GAAP net income. That is really a key ingredient that is going to please the market here in the 2020s, something that companies like this didn't have to worry about so much in the 2010s.
The balance sheet for Monday is another highly positive factor. Nick, I see you titled this Fresh and So Clean. Oh, wait, not fresh and so clean, but just fresh and clean.
I got the title wrong. Sorry.
Yeah, you did. You really missed an opportunity there. But all cash, no debt, really nice balance sheet. Do you think they'll be making any acquisitions soon with that balance sheet?
It's really hard to say what their plan is. So, the vision for them being a unified platform where all the products work together seamlessly would kind of seem to indicate that if they made an acquisition, it would be smaller acquisitions where they can take an existing product and quickly migrate it over to their platform. The way they've been working this so far is they've kind of shown more of a willingness to just increase their internal development of new products instead, and maybe allow the free cash flow margin to take a hit in the short term. Maybe that will change at some point. Maybe they're simply just accumulating cash because they plan on eventually, starting a large share repurchase program. Maybe it's going to be a combination of all three. I think ultimately for us, we're fine to just let them do their thing because it's working at this point. So happy with management's execution on this front.
One thing that has been a concern, as with all software companies, is stock-based compensation. Is that an issue with Monday.com?
Yes, in one regard, you could look at this and say it is an issue. However, maybe we could just play devil's advocate here for a moment, excluding the fact that this rate of SBC is actually not egregious like it is for some businesses. Let's just call this one of the embedded costs in a software-based business. In yellow, there at the bottom, we have highlighted purchases of property and equipment, capitalized development of software. This is an asset-light business. They don't have to spend all that much money on hardware, on infrastructure. The trade-off, though, is of course, asset-light business means you're going to be highly reliant on your software know-how and retaining the talent that knows what to do with development of that software. So you end up with share-based compensation. Again, we've done plenty of videos on this on our Outlook. I think ultimately we're fine with this. SBC seems to be under control, and free cash flow on a per share basis. This continues to just boggle my mind. I don't understand why investors will use GAAP net income, earnings per share, but do not use free cash flow on a per share basis. That metric accounts for stock-based compensation if you're worried about dilution. Anyways, I digress. I don't need to rant about that again. I think this is under control here. What do you think?
I like stock-based compensation. People should get paid.
Maybe we should reference a video from last year that explains why stock-based compensation is important, unless you want to have a Jurassic Park situation on your hands.
Exactly. Here is the stock chart for Monday.com, dating back to the IPO in June of 2021. You can see that it peaked in the fall of 2021 and then fell off. We're still a long ways from that IPO peak. And the reason we actually ended up with Monday.com in a roundabout way is because we own Salesforce. And Salesforce took a very large position in Monday.com's IPO, sold it for a fantastic gain. And then we started nibbling in 2022.
Yeah, it's been about 2 years now. We bought a very small starter position. We've only actually bought one other time, and I actually did forget about this. Kasey, you know this, but I don't check our portfolio all that often unless we decide we're going to make a change in the portfolio. Then I tend to go in and see what's going on. But February of this year, we took a very small starter position in Snowflake. 3 months later, we very quickly course corrected. And when that video came out in June, saying that we course corrected on our small starter position in Snowflake, that was the point where the only time we've ever mentioned it on the actual YouTube channel, excluding Discord and some of our public written articles that are still floating around out there. This is the only time we've ever mentioned Monday.com here on the Chipstock Investor channel. So we bought a very, very small additional handful of shares back in June. So I think it's high time we kind of mention this. This is still a very small starter stock. It's part of our small cap basket portfolio. Yes, Monday.com by traditional measures is not a small cap stock. We understand that. We have our own definition of what constitutes a small business. Monday.com is a very small drop in the very large enterprise software bucket. And so we thought maybe it was a good time to mention it now, finally, do a deeper dive video on the channel here. After that ARR, 1 billion in annualized recurring revenue milestone that they reached here just recently. So, that's how we ended up with Monday.com. Kasey, the folks really probably want to know, and probably at least half of them have fast forwarded to this point in the video, valuation. Is it still a good buy right now?
It's still expensive, really. You can see on a forward basis, price to earnings at 90x and price to free cash flow on a forward basis, 45 to 46x. So it's not a cheap stock, not a cheap small cap stock.
No, I agree. It absolutely is not. And so, in addition to this being a small position in our small cap basket, this is one that we just kind of plan on nibbling on from time to time. We don't have a price target on it. This is not one that we're going to fire up a dollar cost average play on. But two things here on valuation. On a gap price to earnings basis, 90x 1 year forward price to earnings might be a bit misleading because they just reached gap profitability first half of this year. So that's why that metric is so high. On a forward basis on free cash flow, has it been cheaper? Yes, it has been. Not by much though. As long as the business continues to grow gradually, let's just say north of 20%, kind of like Salesforce did during the 2000s and 2010s, and can continue to scale its free cash flow along the way on a per share basis, I think this valuation is well supported by Monday's financial progress. So I think there is that caveat. Yes, it is a premium stock that implies lots more growth is coming, but the story up to this point definitely supports the premium that's in place.
I agree. I'm happy to have this one in our small basket. I'm excited to see what the company continues to do and the moat they try to create in their software business.
Some of you probably also know, at the beginning of the year, we called one of our top non-chip stock picks of the year was Salesforce / ServiceNow. Salesforce, by now at this point, if you're watching this video, Salesforce has already provided their latest earnings update. We'll have a video out on that next week. But perhaps Monday.com, maybe this is a top software pick at some point in the future for us. We still like Salesforce. We're fine with it being in the portfolio, but it's become very obvious that their days of very high growth have come to an end. We're young investors. We're always looking for that next high growth story that could turn itself into a core position in the future. Maybe that's Monday. Stay tuned.
Make sure you subscribe to the channel and check out our affiliate link with FinChat. We used a lot of their charts in the video today. You get 15% off a membership with them by using our link below. Great product that we really enjoy using in our analysis. If you want to know what other stocks we have in our portfolio besides Monday.com, we have a channel specifically dedicated to that on our Discord server. You can check that out on Ko-fi, link in the description below. $5 a month gets you access to that, as well as our show notes and live Q&A sessions. We'll see you again very soon at Chipstock Investor.